What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 9th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, it's an exciting day to be in crypto. Bitcoin has yet again broken above $11,000, breaking through a very key technical pattern in the market, and we're not only going to be talking about why this has happened as we've started to see a rush of companies get involved into Bitcoin, but I want to talk about a deeper narrative that no one seems to be discussing as to why they're actually going about acquiring Bitcoin, and a lot of it has to relate to a philosophy promoted by Warren Buffett, which I'll talk about towards the end of the video. So let's go ahead here and go right through it, guys. We can see here on the technical price action here, Bitcoin having two solid green days here. Volume, not really good or bad, it's relatively neutral, but above all here, what we're looking at is price, and we're seeing here that we're breaking above the line of resistance from our relative high back here in August of 2020, our secondary lower high, and now breaking through very clearly, testing back up towards the smaller relative highs here in September. After holding all the way back here in May, our line of support, not breaking to lower lows, but instead setting higher lows. The broader market as well, looking really nice here. Across the board over the last 24 hours, the vast majority of cryptocurrencies in green territory, with many in double-digit territory, with very few exceptions down in the red. And this is really awesome to see, and as you can tell, most of these are DeFi plays from Yearn Finance, Uniswap, SushiSwap, UMA, Avalanche, Band Protocol, Kusama, Swipe, Solana, Chainlink, Ocean Protocol, Aave, down the list from Synthetics, Ren, Omise Go, you name it, right? They're either enterprise blockchain plays, layer 2 solutions, oracles, or DeFi plays, generally speaking. So now let's just go ahead and cut to the chase here. You probably are wondering, why is Bitcoin up here? Well, you might have already heard the news already. This came out yesterday. But Square had announced, one of the major payment processors out there on the market, had announced that as a company, they were going to be acquiring over $50 million of Bitcoin. And not only that they were going to, they already did acquire $50 million of Bitcoin. And they not only explained their rationale as to why they did it, but they also explained how other companies can do it. So this is the really interesting element here. We already saw with MicroStrategy back, I think it was in August, when I was still traveling abroad. MicroStrategy had come out and acquired a massive amount of Bitcoin to compensate its balance sheet. And with this, we've now actually seen Square take a pretty decent sized chunk here. Not as big as MicroStrategy, but kind of following up here and building a movement, being the second player to say, hey, we'll join you on that bandwagon. And this is basically, you know, as we go through here, not only something that other companies can do here, but what Jack and many other people who, by the way, Jack, if you guys don't know, is the founder of Twitter, also the founder of Square, founder of a lot of successful startups out there in the market. He's a big fan of Bitcoin, and with this, he's providing the guidance here to say, like, hey, other companies should do the same. It's not just a move that we want here at Square. And they actually provide a full, actual white paper explaining why they did it and how they did it. Now, this is going to be very valuable for a lot of companies, and just having another major company, a multi-billion-dollar payment processor, coming into the game and doing something like this is actually pretty big. And I'll explain why. This isn't just speculation and price around, Jack and all these people bought Bitcoin, so therefore it's cool and it's important. No, it's really a question of who's next, right? I mean, this was already interesting to see MicroStrategy do what it did. I mean, to position itself with its full balance sheet basically in Bitcoin, I think that's a very, very noble move. And to see other companies at least dipping their toes in, it starts to lead people to ask questions of, can Elon Musk do this? Can other major CEOs who are at cutting edge companies, who probably have some decent understanding of Bitcoin, who also are looking to hedge the cash and reserves that they have, would they do something like this? Well, I would say that maybe Elon could be someone to do this. Tesla obviously is a large company now, probably has much more cash reserves as they've turned from burning cash into actually turning a profit. I would say Tesla is probably a pretty good prime candidate for this, and Elon, founding PayPal, has a decent understanding of Bitcoin, as we've seen in the past. But I don't even want to just stop at Tesla and these kind of new age companies. This is a very prominent issue for a lot of different individuals. And I want to actually go ahead and speak a bit to this problem that no one's talking about. So we'll go through some of the data here, guys. There's a lot of data science I want to look at, but we can see here there's a really good tweet storm that Meltem Demore let out basically talking about corporate treasurers. And this is basically a trend that started back in the 70s when inflation rates grew extremely high. So this is the consumer price index, the inflation rate the Fed wants you to know about, rather than the real world inflation. But all in all, you can see here that there was a period of time where inflation was dramatically higher than where it is now. And because of this inflation rate, due to the excessive printing of money, this dilutes the purchasing power of dollars, and therefore asset prices are rising at the time. So corporate treasurers who had cash on reserves, where it used to be fine to just keep your money in cash to avoid risk, and you wouldn't have to deal with too much inflation. Well, with high rates of inflation and printing, you have to go ahead and position yourselves in other types of assets. This is the narrative that a lot of people are focusing on, and how, for example, I know this chart cuts off at 2003. If you look forward, we're printing at record rates, and I don't want to doubt that that is playing a very big role. We've seen it play a role in leapfrogging asset prices from stocks to gold to silver to cryptocurrencies. But it's not just the printing that people are worried about. It's not just the printing as to why Square is making the moves that they're making, right? Jack, the guys over at MicroStrategy, they know what's coming here in the next year or two. They're the people who are in tap and in touch with the cryptocurrency space. They know what's happening in the central bank world, and they see the second fear that has been well known by smart money for a very long time. And Warren Buffett talked about this back in 2016. It's negative interest rates. Now, we've been living in a world here for the last few years where, actually really over, wow, I can't believe it. It's been over 12 years here now, where 0% interest rates or near 0% interest rates have become the standard by the Federal Reserve and many other central banks across the world. We've seen Japan and, Japan and many European countries already normalize negative interest rates for a couple of years. And now, one of the largest economies in the world, alongside the UK and many other countries, are now looking at possibly going into negative interest rate territory. Some of them are saying they're going to do it. Some are saying they're not going to do it. The treasury yields that we've been watching here in the channel, the betting markets that we've been watching, all of the points of analysis that we can see, the performance of bank stocks are a great indicator as well, all are showing that the fear that Warren Buffett has and talked about in 2016 could very well become the normal reality in order to continue inflating asset prices and to continue stimulating financial markets. What Warren Buffett talked about in this video, and I know I don't want to ramble too much on this, we'll get back to Bitcoin in a minute. He talked about a very critical problem for one of his companies in Europe, and that was that they had a massive amount of euros on the books in Europe in a European bank. And the problem is, with those euros, he's getting penalized for just holding cash, for basically holding cash in reserves. And this is a problem with negative yields on interest rates, where he basically would be better off putting his money under a mattress. In the modern world, that just doesn't work, right? You need to have money ready to be active for business transactions. We aren't a cash-based economy anymore. You're stuck somewhere either in between a traditional payment network, which is going to involve banks, or you're able to get into an asset that isn't going to penalize you with negative interest rates, that isn't going to penalize you with massive amount of printing. Well, what is that asset? That asset is Bitcoin and other cryptocurrencies alike. I truly think in this case, guys, this is the perfect kind of narrative here where companies, again, we've been talking about fund managers, all these different types of parts of the financial sector. Corporate treasurers in this case do have a very important role to play during this time period where money printing is excessive, negative interest rates are on the horizon. All these elements coming in have built a very perfect storm for Bitcoin as an asset to start rising up and get above that $1 trillion threshold as an asset, not in the sense of price, but in the sense of market cap, right? Now, I want to go ahead here and dive a little bit into the data here now that we've talked about kind of this fundamental narrative here, right? Are the fundamentals proving that Bitcoin as an asset can do this? Well, price is not only going up today, but there's been a lot of valuable things to focus on in regards to the fundamentals here. There's been a lot of people. I know Willy Woo has been one on like Twitter. He's been one of the big data scientists who has been coming out and talking about crypto. Actually, sorry, this isn't the chart I want to pull up. This is the one right here. I wanted to go ahead and talk about something that just is, clean cut, to the point. It's not biased. One of the important things to note is how much Bitcoin is on exchanges. So when someone is generally coming in to buy Bitcoin, one of the most common and popular formats is spot exchanges. There is OTC. There are other formats as well, no doubt about that. But the major format that a lot of people are going into when they're buying Bitcoin, and when we have to determine the supply and demand around what's going to determine spot price on the market, which is most critical if we're talking about Bitcoin's performance as an asset. The amount of Bitcoin since back here in September of 2019 has gone from around 1.5 million down to 1.2 million on exchanges. So we have seen a massive depletion here across exchanges here on the amount of available Bitcoin for trading. And this is a very important point here, over 0.3 million here. Right? So 300,000 less Bitcoin here. We're not getting more as there's new mining rewards. That's the interesting point to take into mind. You would expect during this time we'd be having increased liquidity, but that's not the case. So any new Bitcoin that are coming onto the market, as we talked about, between Grayscale, between companies like MicroStrategy and Square, all these new kind of frontier companies making this move are acquiring it. And what it's led to is a really interesting dynamic. It's the perfect storm right now for what we're seeing on a fundamental narrative, but also in the technicals, right? We had the line of resistance that we talked about for a long period of time. Back here, we were talking about the third retest here of the line as we were flagging here in price going into July. Again, line of resistance, we broke above there. It was a catalyst moment, but what's important to happen here is that we come down and retest it just like we did with gold. And we had multiple weeks here where we retested it, and we not only made it support, but we turned this line of emerging support since back here in April and May into new support. We have formulated what was originally a line of resistance and now made a new line of support here for price to start kicking up higher, setting in higher relative highs, higher relative lows, and eventually getting back up to that big even level of 20K. That's what we're looking for here. That's the target price here, guys. And it's why I've been hitting on it not happening by the end of this year. It probably won't, but it will likely happen sometime in Q1 or early Q2 of 2021. I'm very solid and confident in that happening because as we look at the logarithmic chart, there's really not that much room to go before we get there. If we get another March to July rally or a January to July rally, even a fraction of that or half of it, that's going to be enough to get us over that threshold on the logarithmic chart. Now I want to go ahead and talk about some other fundamentals here just to kind of build into that chart narrative here, right? We're going to need some big swings in supply and demand. We already had the halving event happen, so we're going to need some other elements here to come into play, and that's really going to be on the supply side because we're looking here, and not actually it also is going to be equally demand, but I'll explain both ways. So we have the demand element here, which is not only the companies starting to get on this bandwagon of what Jack has talked about, and again, putting out a clear white paper on how to do it is a really great tool in this case. So this is going to start adding some more increased demand, but we also want to see what can happen on the supply. Well, we can see here on the HODL waves, we have continued to maintain our all-time highs on the 1 year plus HODL wave here. This means the total amount of people who are holding Bitcoin long term. Again, there's the broader HODL waves here. Again, in this case, it doesn't seem to be giving us the updated price range here. But we can see here, broadly speaking, that over the longer term track record here, we have these different waves of time periods where people have been holding Bitcoin. And we've revisited this chart since as far back as 2018, right? Where you can see over 5 years, in this case, we now have over nearly 21.6% of Bitcoin being held for over 5 years. You can see here the 2 to 3 year really expanding here, and also the other time frames starting to expand on a longer term time frame. It's even bigger than this right now, guys. Along with this as well, the stock to flow model, the old legendary metric we use to track Bitcoin following the halving events. A lot of people have the misconception that Bitcoin is just going to soar right ahead after the halving event, but it doesn't. It has a trailing period where it starts to lag behind the fair value of the stock to flow model, these kind of stepping stones for Bitcoin's price. It's going to take a while to get back up and make contact with this line. I think it's not going to happen until 2022, right? And the reason I say that, is because we saw last time here that it didn't happen until very much a couple of months here after we set in the relative kind of peak here, at least the kind of major stop in momentum here for the stock to flow model. Every time we've continued to push back further. We overshot it here. We pretty much met at the peak here right at the top. We had one slightly delayed here, and I think it's going to be into 2022 when we actually get somewhere towards this range. And again, I've pointed out here, I don't think that Bitcoin is going to peak above 100K to 200K until as far back here around November of 2022. I'm a little bit more hesitant than other people, right? I try to keep my estimations conservative. But even that, guys, right? If you guys want to just take it for a grain of salt, in this case, you don't agree with me, I have the more conservative opinion here than most people in the space. I try to be rational with you guys. But even if that were the scenario, that's a fantastic scenario. So you've either got the more optimistic cases out there, and you've got the conservative cases like myself, and a pretty small chance of Bitcoin not meeting either of those. And the reason I stand so confident in it is because Bitcoin is such an early asset. And if we're starting to see companies acquire such a large amount of Bitcoin, when it's only a roughly $200 billion asset, the sky's the limit here, folks. We've got so much growth potential. Going towards 100K is going to be very reasonable. Not to mention, if we're talking about data science here, the amount of lost Bitcoin, the amount of Bitcoin lost to dust, the amount of Bitcoin that's being held by funds, that's being acquired from the mining pool, the mining pools out there in the market that are coming on and mining the new Bitcoin that are available, the little bit that is coming onto the market. There is a major supply and demand dynamic coming here into play. I'm so excited to be here with you all. But again, the big point that I want to emphasize that no one is talking about is something that has been a fear of Warren Buffett and many other major companies out there on the market. And that is, in this case, the inflation, but also the negative interest rates. And we're going to have to see how companies adapt, especially technology companies and other cash-rich companies out there, during this very interesting period of monetary policy. So, anyways, guys, above all, I'm happy to be here with you during this time period. If you liked this video, please consider subscribing, hitting that bell icon, dropping a like, and I want to hear most of all, if you do any of these things, please leave a comment down below telling me what you think about all of this. Please give your thoughtful responses. I want to hear from you guys. Are you guys excited about this? Do you think that this is a catalyst moment? Do you think we've officially broken through here for Bitcoin? Or do you think this is going to fade off and that it's a nothing burger? There's nothing here, right? I'd love to hear from you all. All right, everyone. Hope you're having a fantastic day wherever you are, and I'll see you all in the next video. Take care, everyone.